Welcome to another episode of Educating Homebuyers, the podcast. I'm your host, Brady Hay, and my mortgage team has over 9 years of mortgage experience here in Des Moines, Iowa. Whether you're buying your first home, upgrading, investing, or simply just curious about the market, this show is all about helping you and future homebuyers feel informed, educated, and comfortable as you take your next step. Each week, I sit down with real estate professionals, past clients, and local experts to unpack real stories, real advice, and what you actually need to know when buying a home today. Without further ado, let's get into today's episode. In today's episode, you'll hear from somebody who's made a lasting impact on my career as a leader, a mentor, a friend who's built a business on service, strategy, and genuine care for people. With over a decade of experience in the mortgage industry, he's helped countless families achieve homeownership, all while balancing life as a husband, dad, and a real estate investor. He's insights into leadership, leading a legacy that are ones you frankly will not want to miss. Louie Wickett, welcome to Educating Homebuyers.
Really appreciate you having me on, man. I'm excited.
Yeah,
it's
dude.
Been fun to.
It's we've worked together for a long time, but it's kind of fun to throw this on you kind of last minute. We kind of put a last minute little deal together, but I think that the time we're going to spend today just diving into what we've been going through and what we've been battling and just our everyday lives is going to be valuable for people to listen to. So
For sure. And I want to give kudos to you. I know you've been passionate about the podcast this whole year, and I've seen a new spark in you, and I feel like it's reached a lot of people locally, and you should be proud of that.
I appreciate that. Yeah, it's and we've talked about this on our calls together and just meetings in general, but it's easy to be passionate about something when you have fun doing it and you see the impact it's making. Like, it's so much easier for me to show up every time that I come and record when I'm hearing this positive feedback from people that are learning from it and gaining value. And we talk about it all the time. That's what it's all about, right? Yeah. We want to give value to the people that we're interacting with. And this is a way that has allowed me to do that. So
for sure. And that's everyone at our office and really in our whole division in the Midwest. We kind of lead with that, right? We want to provide value everywhere we go, and if you can have fun doing it, it makes a world of a difference. And it's been fun to see people that you've never even had a conversation with reach out to you, and they want to meet and they want to learn more about you. So that's awesome. Yeah,
which and again, it comes back to not necessarily highlighting me; it's highlighting people that can learn from it and tips and tricks on things that I've learned 100%. About being a mortgage lender, right? Like. And my vision is, and as we progress into 2026, is I want to give more people an opportunity to have a platform and help educate homebuyers, because this industry needs a positive light and frankly a positive spark. The last 3 years in real estate have been hard for most people, whether it's industry professionals or homebuyers. It's a different game and a different industry than what it was the 3 years prior to that. So this has been a fun way to provide a positive spark and like I said, give people a platform to just share their story and give more insight into what they do. So
100%. Yeah, it's been fun to follow.
Let's kind of start off and just give everybody a background. How did you get into mortgage lending? Where did that start? How did that begin? And then kind of give everybody an insight into your career and your life in general.
Yeah, so got into mortgage when I was at Grandview, my senior year. That last semester, I was applying for countless jobs, going through that stressful time. And my roommate at the time, Nathan Anderson, grew up in Madrid with him. He went to Grandview. He was already working at Wells Fargo. And as you know, obviously that's where we met. But they were hiring people at the time, at a fast pace. And if you were a hard worker and you could learn quickly, they wanted you to be on their team. So interviewed for that gig, had no mortgage experience, didn't know a lot about it. But
you had a football background too, for everybody's context.
Yep. Played sports growing up, went to Grandview to play football. Got injured during that time, got into coaching while at Grandview. I knew the whole coaching thing wasn't for me long term, just with, I wanted to get into work, make money, and, support a family. Yep. And the mortgage thing kind of fell in my lap with my roommate doing it at the time. Interviewed, joined his team, and then kind of the rest is history from a mortgage standpoint. I didn't know if I'd be in it long term, but you start to get better at your craft. You learn more about the industry, and a lot of people have bad things to say about Wells Fargo. I personally don't, because I learned a lot. I got a lot of at-bats. I learned how to have hard conversations with people, good conversations with people. So, I enjoyed my time there, but I was excited to, take it to the next level and go out on my own.
Yeah. Yeah. And we aligned in that as far as the timing of when we were there. Really, I think you were there a little bit before me, and I don't remember which one of us left first, I guess technically, but both of us had nothing but positive things to say. And I'll tell you, like, from my experience, like, they really kind of throw you to the wolves out there. And for me as a young adult, because I was same as you, fresh out of college, I didn't realize it at the time, but that's what I needed. I needed to be just kind of exposed to whatever life was going to bring. And, you know, I've said it before, like, I didn't even know what a loan was when I started at Wells. I remember vividly in my first or second day of training, they'd start throwing out words like amortization, and I'm just like, what in the heck did I get myself into? And, you know, like you said, you fall in love with the process of how you do it. And now it's really cool to look back on 10 years later and the brand we've been able to build. And that's kind of where we see this future going is, you know, we've now been with the group we're with for, I'm going to mess up the timing on this, but what, 8 years, give or take ish.
Yep.
And I think that's what our competitive advantage is, right? Our brand, our group, the guys that we work with, and women and girls and everybody that works a part of our division, we're very similarly aligned in the way that we want to treat our clients, and we want our brand to be recognized from a national standpoint. For
sure. And, you know, I think we've all had opportunities, you know, to go elsewhere. And there's a lot of companies that'll flash money in front of you to make a move. And I think that's what's been the coolest part about our group. We've been through the highest highs, lowest lows the past 5 years, and we've stuck together. You know, it's a long game for us.
Sure.
Not, you know, there'll be opportunities down the road, but we're not just going to leave because of a bonus or because, you know, I think that's been the coolest part about our whole group is there's been some tough times in the past couple of years.
Yeah.
And all of us are there to pick each other up, you know, give ideas, give advice, to help the guy next to us, even though it might not make us money at the time. So that from a culture perspective, I don't know if you can find that anywhere locally or even nationally with a group like ours.
Yeah, so I would agree.
It's been awesome.
If you're a realtor or a client listening to this, what would be the way you would want the Key Mortgage Group brand to be perceived?
So you know, we always lead with education, empathy. We understand clients are in unique positions, and it's our job to peel back the curtain, spend time with them, you know, learn about their situation, make them feel good about the decision they're about to make. Mm-hmm. And obviously be there for our referral partner.
Yeah.
I think that's super important. Things can go wrong in real estate, and it's important to have each other's backs.
Yeah.
Because it's really easy to point the finger. And, you know, we tell all you guys, it doesn't matter whose fault it is. You need to have each other's backs to make sure it's a good transaction for that client at the end.
Yeah.
So from the outside looking in, I want people to know that we do good, solid pre-approvals. You know, we vet people on the front end. We're going to have their back throughout the transaction, and that client's going to be educated, so there's no surprises, you know, at the end of that transaction.
Yep. And that's what's cool is we've all kind of embraced that wholeheartedly. And, you know, our hope is that in the Des Moines specific, Iowa, and even beyond that, all the different markets that we as a collective serve, regardless of whose name is on that pre-approval, if you see that Key Mortgage Group brand, you know that thing's good.
For sure. Sure. And I think you would agree, we definitely didn't start our career that way. It was, you know, at Wells, we didn't know a lot. They just tell you to get on the phone and
make the phone ring.
Get applications. You know, that's what it was. And now, you know, even in the past five years, the amount of time we spend on the front end for a client,
we've really honed that in.
Yeah. That's where you make your money. You shouldn't have to worry about anything else throughout the transaction. Obviously things can come up, but if you do your job on the front end, it makes it a better experience for everybody involved.
Agreed. I think one of the more unique things that we've implemented really over the last, I don't know when, I guess it was probably 10, 12 months ago. I've loved the implementation of the preliminary income review. And a lot of places offer that, you know, TBD underwrite or like a full underwrite review prior to pre-approving. But for us, that prelim income review, usually for anybody that's listening to this, usually one of the biggest hurdles that can come up with a client is usually income related, right? And when income is variable, we want to make sure that we have that income dialed in, and when we know confidently how much income we can use to help support the pre-approval, right? Well, recently our company implemented this preliminary income review where not only is it us as the loan officer giving the green light on this, but we're actually getting it pre-underwritten to confirm that. And I'll tell you, like, I've got a client that literally I got a prelim back this morning, and we were able to dial in an exact price point and an exact monthly payment that this client was not only going to be comfortable with, but how high they could go on price point. And for lenders or for realtors and clients listening to this, that should be such a huge value add to them, because we know confidently now we can proceed with an offer and no surprises are going to come up later, right? Just like you talked about. So that's been one of my favorite things that we've implemented is having the peace of mind to know we've already vetted that up front and no surprises are going to come up later. Because again, circling back, when you get a pre-approval letter from Key Mortgage Group, we have to have you know, not only is it going to get to closing, but it's going to get to closing smoothly and on time. That's something that's not negotiable for us.
100%. And if it's not, everybody knows about it. And it's because of an issue that came up after the fact.
That we couldn't have controlled. Yeah.
100%. So, it's, the income review piece, it can be a make or break for people, to qualify. So that has been a huge pickup. Because most of the time when we send it to a pre-underwrite anyway, it was for income. Yeah,
exactly.
To implement.
And this is quick. So. Like I literally submitted this example yesterday at 3:00, and I got an update this morning at 8 a.m. Yeah, like it's fast. And we can't obviously promise that depending on scalable and the market conditions and things like that. But it's been a huge pickup for me and my business, and I have enough experience that I've got a pretty good understanding of how a cash flow works myself. But just to have that peace of mind to know the underwriters also reviewed it is super nice.
I mean, every employer, every job, there can be tricky income out there. So.
Without a doubt. I think that's even an interesting point to talk about that maybe not enough people are exposed to is the concept of variable income. Do you have any interest in talking about that or like explaining what that means to people? So like if somebody's listening to this, what's an instance of variable pay that would be maybe affected that somebody wouldn't realize would be?
Yeah, so when we look at pay stubs, we're going to look at your year-to-date pay to make sure it's in line. If it's not in line, it could be multiple reasons. Did you get a raise? I always ask the question, if you were to take time off today and leave this afternoon, do you get PTO? Yeah. And if they say, well, I don't have to use it, or no, not necessarily, that can be variable income. Yeah. Obviously we look at the pay stubs. If there's less than 80 hours on there, that's, start asking questions. Right. Because they still might be guaranteed hours. They might be, guaranteed 36 hours a week. Yep. But it goes down that deep dive because we need to show a length of history for that variable income in order for that person to even qualify. Yep. Even if they're crushing it. Exactly. So that's the important piece. If if a client's unsure of their income, or agent is unsure of their client's income, just get out ahead of it. Yeah. We're happy to take a look at it, to offer advice and get you on the right track because you might be closer than you think to qualifying. Yep. So. And
I want to make sure that everybody knows that just because your income is variable, mainly hourly or commission, doesn't mean you disqualify either.
For sure.
What we look at is usually, first and foremost, do you have a 2-year history of receiving that kind of income? And if we don't, what's the reason why we don't? So did you just start a new job, or did you, maybe accept a different position inside your company and, your pay structure changed, so on and so forth. But basically what I would tell people from a common sense standpoint is the situation just has to make sense, right? And so for the example that I'm, working on right now, this client that I had underwriting review, this specific client had been at her job for a year and 4 months, but really only been in this current position for like 6 or 7 months. And so we had to have a unique cash flow as far as how much income we can give her credit for, because if we would have done an average over the last year and 4 months, the prior position had a way less hourly rate. And so it was skewing her average, right? If we were to just do a 2-year average. And these are all things that I noticed prior to approving. So that's kind of a unique example of something that we as lenders are looking for is we want to make sure we're giving you credit for as much income as we possibly can to maximize the amount of household you get approved for.
For sure. And I think the whole point here is we're going to dive in to make sure that, we can actually approve that loan.
Yep.
And agents, my top agents respect that because they don't want to go show a bunch of homes, get people excited about them if that person's not going to qualify. So maybe give some extra time to make sure that, that's the best advice for agents is like, let's get out in front of this early. So when the right house does pop up, they're ready to go.
Right.
Not right house pops up and then try to get all this, which we run into all the time.
And I'll tell you confidently, call center Brady in the early years of my career would have just looked at the last 2 years W-2s and done a 12-month average or a 24-month average of that. Right. Now we understand and know we need those pay stubs and maybe even year-end pay stubs from last year to see how much the income was last year. These are all different things that we're thinking of this on the moment that application gets submitted. Whereas a lot of people won't ask for this stuff up front, which can jeopardize your, accuracy of that pre-approval. So,
which has happened to all of us,
for sure,
over the years. So you get burnt and you learn and then your job is just to make sure it doesn't happen again.
Exactly. So. Yep. Definitely. What else? How's the family? How's the other side businesses been? You guys, you kind of spread yourself pretty thin lately. What's
No, it's family's good, man. I mean, it's crazy how much your life changes, once you have kids. I mean, you guys see it at the office. Got a kid that's sick. I got to go pick up the kid, bring him to the doctor, but it's awesome. I wouldn't change it for anything. Yeah. Even though some days, I'm exhausted to the max. But, the side business, Kalia Capital, we've been growing like crazy. And, I'm really proud of what I've been able to do in both, arenas.
You really run two full-time businesses at the same time. Sure. You are a full-time mortgage lender and branch manager, technically speaking. But you're running a full-time operation from an investment standpoint. And for everybody listening, so Louie is part of Kalia Capital, which is I'm going to call it an investment group that kind of oversees, rental properties and renovations and all that good stuff. So I don't know if you want to take an opportunity to share some insight into that.
For sure. So we're value add real estate syndication company is the best way to put it. So we're looking for multifamily units that are poorly ran or need updates or they're not safe to live in currently, or we're looking for just properties that we can convert to apartments. We've done 2 motel to apartment conversions. We did both those in 2024, which, we had to think outside the box to get those deals done. But sure. We're looking for something that we can add value in to get rents up to market. And honestly, the whole goal of all of this is to become financially free and make sure that, I leave something for my kids beyond what I could have ever dreamed of. So that's the why behind it, or else, I could just go home every night and chill out. But
what are you trying to say about somebody that goes home and chills out every night?
There's nothing wrong with that. There's nothing wrong with that. I would tell you, if you don't have kids yet, go enjoy that.
Yeah, for sure. But I do think that's an important point that I'd love to have you share, because I can tell you as a friend and colleague of yours, your perspective of your hustle has changed a lot since you've become a father. And I respect it a lot. As a family man myself, yes, I don't have kids, but I pour into my family as much as I can, obviously. But I'd love to have you share, like, how is that perspective changed how you handle your businesses and your day to day? And, you've been with your wife for many, many years, but I've seen since you've had your kiddos a shift in your perspective and your priorities. Sure. So I think that's a valuable touch point, even though it's not necessarily real estate related. No, I'd love to have you share on that.
For sure. So, we've been out to eat at night and stuff. And I tell you guys, like, I want to get home for bedtime, that, like, little things like that, I always want to be home for bedtime if I can, unless we have a work event that's going to take away from that. But, it's just, I used to pour my whole identity into mortgage. If you look at earlier in my career, just everything mortgage. If I didn't hit numbers, I wouldn't be happy and all that. And since having kids, that's the most important thing to me.
Yeah.
Obviously, my job is super important because that's what puts food on the table. But, you know, I want to make sure that I'm present, I'm a good husband, I'm a good dad, and, you know, 10 years down the road, I'm not going to regret anything and look back and be like, oh, I wish I could have been home more when they were young, because they're not young anymore.
Right.
So
And how hard is that amidst the chaos?
I mean, it's
Almost impossible.
Yeah, but I set boundaries with clients.
Yeah.
You know, I think that's important, where like earlier in my career, I would take that call and do the whole consultation right then and there. And I still do that sometimes. If we have nothing going on, you know, I'll ask my wife if I can step away for a minute. But a lot of times it's, you know, are you looking at a property tonight? No, I'm not. Okay. What does tomorrow look like, or Wednesday look like, to where we can get something scheduled? Where earlier in my career is, let's get it now.
Yep.
The lead's hot. You know, I want to get these people in. It's just setting expectations and boundaries with people. And,
Sure.
you know, once I've made that shift, like, you know, I don't lose a lot of clients because of it or anything. They respect.
I was going to say, arguably, I would say that you probably gain more clients because of that,
for sure,
to some extent, right?
I mean, I've had my kids yelling in the background of client calls, and then
makes you relatable.
Make a joke about it. And, you know, relatable, you know, I want people to know that I'm going through a lot of the same things that they're going through.
Yeah.
But yeah, all in all, man, I want to make sure I'm present to just try to raise good people.
Yeah.
So
I sent this to my sister yesterday, just because she carries a big heavy load, similar to what you guys do as well. She's got 3 little ones, and she's a full-time worker. And the quote, and I'm going to butcher it, but it was something along the lines of, if you ever feel like incredibly overwhelmed amidst the chaos of being a parent and a full-time staff member, life is only that chaotic because you care and you pour into everything that you give, right?
For sure.
And it was something along those lines of, like, you're only experiencing all this chaos because you're putting in every last bounding effort for them, right?
For
like,
sure.
so you're only busy because you give a shit. And that's the cool part, is like, you're not busy with shit that doesn't build them up or build yourselves up or build your family up. It's all for one conjoined effort to just make an impact. So as hard as it probably is to remember in the midst of the chaoticness that comes with it, just know that you're doing things in a positive light. So
it's challenging for sure, but you know, I wouldn't trade it for anything. So
as we quickly approach the end of 2025 and transition into 2026, would be curious to hear your insight on, like, where do you expect the market to go? And, like, are there any things that any tips or tricks that you would give to prospective home buyers that are maybe considering making that transition or decision to buy a house in 2026?
For sure. So, you know, I want to start with first-time home buyers.
Okay.
And then we'll kind of move to people that are selling and buying.
Yeah.
But first-time home buyers, I think it's always going to come down to get with a team that you know, like, and trust when it comes to the process. You know, one thing that I think both of us in our whole office does a good job is the education piece. Like, we want to help people make better financial decisions, not just on their house, but on their total financial picture.
Yeah.
And the more that we can teach them for that first house, I mean, we can create clients for life.
Right.
You know, as you know, we get the repeat buyers, refinances. So get with someone that you know, like, and trust, and you deserve to be educated about the process.
Yeah.
There's so many people that, you know, have done a loan elsewhere, worked with a realtor that they didn't quite know or trust, and they didn't learn anything throughout the process. And to me, that's a big miss on that loan officer and that agent's part.
Yeah.
I think we want those first-time home buyers to get to the end of the transaction and feel really confident. You're always going to have that little bit of buyer's remorse because it's just a big transaction.
Yeah.
I've had that on every house.
No doubt.
But if you can make them feel confident, they were educated on the process, they understood their loan estimate, their closing disclosure, and everything involved,
Mm-hmm.
you know, that creates a trust and a long-term relationship. So
Agreed.
that's some advice I have for first-time home buyers. And then, you know, just make sure you understand your budget. You know, we only look at your debt, really.
Right.
You know, we're not going to look at your phone bill. We're not going to look at your health insurance. We're not
How many times you go out to eat.
Yeah.
Yeah.
You know, do you travel? Do you, you know, think about those things. You know, if you work in a sales job where you're traveling a lot, you know, think about what type of home you want.
Yeah.
You know, like low maintenance townhome, or
Right.
don't just find something and go for it. Really think about your goals. Think about what you would feel comfortable spending each month. It makes the conversation and our advice way better when you come in with that.
Yep.
Obviously, we'll talk you through it, but I think that's really important to just really write down your goals and what you want.
Yeah, I think the two most important goals that I identify when I do my buyer consultation up front are what's your comfort level from a monthly payment standpoint, and how much money are you willing to contribute to buying a house.
Yep.
And I want to make something clear for our first-time home buyers listening is you don't have to contribute money towards buying a house. We have options that can get you into a home without bringing any money to the table. It doesn't have to be an option. But also on the flip side of that is we need you to understand the implications of that as well. And I had this exact conversation with a client last night, but if you are truly going to be a first-time home buyer and do no money down, you need to understand what that means from an equity position and how long you would have to maintain and retain that property in order to make that worth it. And these are all conversations we're having from day zero. If we can truly get the ideal process and get the time and opportunity to talk to a client the way that we know and want to, these are all things we're telling you before you even consider starting to look at a house. So those are the two biggest things. So monthly payment, total out-of-pocket cost. If you can get those two things dialed in up front, usually the rest of it kind of tends to align. Would you agree?
For sure. And we can at least work off that,
right.
You know, to where, hey, I know you said you wanted, you know, 8,000 out of pocket, you know, you got 15 in this account. If it was 8.5, you know, if not, we need to ask for more closing cost credits, you know, because the negotiation can affect
for sure
that cash to close.
I think that's a good thing we could have you talk about too. Explain to the novice listener who maybe doesn't know what is all included when you calculate what we call in our world cash to close. What's all included in that?
Yep. So we take your down payment, so whatever percent down that you're putting, and you would have had that conversation with one of us or someone in our office, but down payment plus closing costs from the lender, closing costs from the title company, the county, you know, for recording fees, things like that, and the appraisal fees. Mm-hmm. Add those. Add prepaids for your escrows. That's for your first year of homeowners insurance. And then we're going to collect a cushion for property taxes and homeowners insurance on top of that. You add all those up, and then we subtract out any credits that are involved. So when you submit an offer on a house, within the first 2 weeks, you're going to put earnest money into the transaction. I would say locally averages $1,000. So we would subtract out $1,000 because you already put that into the transaction. If you paid for your appraisal up front, we'll subtract that out. And then on top of that, you can ask the seller of the home to cover your closing cost. You know, some might cover $2,000, some might cover up to 3% total. So whatever that dollar amount is, we'll subtract that. And then in Iowa, taxes are always a year behind. So that seller of the home owes you for a portion of their taxes that haven't been paid yet. So we'll subtract that amount out as well. So that's how we arrive at the final cash to close number that you'll bring either in the form of a wire or a cashier's check. Yeah. And point being of all of that is there's a lot of moving parts, right? And why it's so important for us to go over that and make sure that we are educating the people that we work with on how that number is calculated. But more importantly, understand you don't necessarily have to worry about how it's calculated as long as you're comfortable with that final number prior to writing an offer. And a service that our office all provides is we film that loan estimate video, which I think has been arguably one of the best implications of our businesses we've ever done for our clients' benefit. Because for context, everybody, when you get
an offer accepted to buy a house, you're going to receive what's called a loan estimate. It's boilerplate. Every mortgage company is required to send you one. And there's a lot of information on there. You're going to see what's your payment, what's your interest rate, how much are your closing costs, what is your cash to close, all of these details. And frankly, it's hard to diversify what is what and what is actually important to you. Well, we, as a service to you, are going to film a video to go through that. And that's something that you frankly deserve, so that you know and understand how everything's calculated. So if you're not receiving that service, which I'll tell you is few and far between, the loan officers actually going through that, just know you're probably not working with the right person there, because the amount of conversations I've had with clients who probably got a loan estimate and didn't get educated on what they're getting. And frankly, nationwide, there's just a national common occurrence that a lot of lenders will try to hide certain costs in there to make their offer seem better than their competition. So I don't know. That's just something we became super passionate about, is being transparent about the entire process, but more importantly, what you're paying and what it's going to cost you to buy real estate.
For sure.
For
sure. Back to the question with, we went over first time home buyers, kind of the advice going into 26. Last part on that, I don't know if rates are going to come down super quick.
Yeah.
It might be a long play. So if you're on the sideline, you're ready to buy, you might be able to get a deal right now. Mm-hmm. So as long as you're comfortable with the payment and cash to close, and you're ready to buy a house, because that's a commitment that you're making. It's okay to rent, but if you want to make that commitment, now is a great time to get in.
Yep.
For people that are looking at selling and buying, one thing that I think we're all looking at for our clients is using equity still at an all-time high. Mm-hmm. And we're using, most clients think they should throw all that equity towards a new down payment, mm-hmm. when in reality, it might make sense to pay off vehicles, pay off credit cards, pay off high interest debt, to where the only new debt moving forward is their new mortgage. Yeah. Their mortgage payment might be going up $600 from where they were at, mm-hmm. but they cleared out $1,500 in monthly debt obligations. So we look at the total financial picture for people, and, I would consider ourselves debt quarterbacks, to really look at everything to maybe show the client blind spots that other people wouldn't take the time to go through. Mm-hmm.
And it might be eye-opening how much more house you can get when you tackle some of those other things, Sure. And I think that that's one thing that we can all agree upon, is that just life in general has been really expensive lately. Yeah. And, if you found yourself in a spot where you're maybe not as proud of some debt you've acquired or whatever it may be, utilizing your home's equity, if you're a previous owner, might be the avenue to navigate that. And, I've had stories where I have families that have growing families where they're, having more kids and they need more space. And we were not only able to get them more space, but pay off debt with their equity that they had earned. And, basically their monthly budget goes down and they get a bigger house to raise their kids in, Sure. And that's for us, that's what matters most to us, is that your families are confident and comfortable, right? And we don't want you to feel stressed or concerned when you're raising your families, from a financial standpoint. And that's kind of the heart behind why we go about it the way we do.
For sure. And there's a lot of people, I go over that with them, who would qualify with all that debt.
Yeah.
So it's like just having the conversation and spending the time with them to say, hey, have you ever thought about this? Mm-hmm. If not, you guys talk it through, figure out what you want to do. You don't need to do this for the transaction. Yeah. But I would just recommend it from an overall lifestyle. Mm-hmm. It'd make your life a lot better if you did this. So that's one thing to point out. It's not just for clients who have to. Mm-hmm. We're going over it for clients that, just might not have even thought of that, because people don't think that. They think they should just put it all towards the new house, mm-hmm. where, not that that's a bad thing.
No, but $10,000 on a credit card can have a 100% $400 monthly payment
that they'll never have paid off if they make the minimum payment.
Mm-hmm. Whereas if you have a house that you're putting that $10,000 towards your down payment, it might change your payment by $30. So you could have a $360 difference in monthly budget if we can just tackle that other debt and wipe it out. Now, the big thing that I'll be sure to drive home is that, you need to understand that if we're going to tackle this debt and pay it off, we need to change the lifestyle that got us there in the first place.
Yeah.
You know, that's the part that most people won't do is we'll go and pay this credit card off. And then we've had many client scenarios where we'll help them achieve this. And then we'll go to do a refinance for them 12 months later, and they've acquired that debt back again. And so, you know, I'm an advocate for a credit card. I am, just because I think that it provides, you know, an extra avenue without having to, you know, come out of pocket for some expenses right away. And, you know, really the rewards programs can be fantastic if you utilize them in the right way.
And it's some protection.
Exactly. So that way you're not exposing your actual assets to the people you're buying things from. However, we need to do it in a light that you understand what you're spending, because I will tell you firsthand, it's easy for things to get away from you when you've got a line of credit. And that's probably one of the best things that we could talk about right now is how easy it is to acquire debt. Outside of mortgages, we do a lot of due diligence as far as what we look for to get somebody qualified. You can apply for a credit card online and they're not even going to check your pulse. I was going to say, you could, if you have a pulse, you got it. Yeah. They're not even going to check your pulse. Yeah. And you're going to get a line of credit. Like these credit cards are being handed out like they're candy. And auto loans. And it goes beyond that. It's auto loans. It's furniture loans. I walked into Homemakers a couple of months ago to buy furniture and put a dollar amount into some computer about how much money I make. And I could have been lying. And they gave me a $20,000 line of credit. No questions asked. Point by bringing all this up is just be careful. You know, just understand your guys' budget and know how much you can financially support. And again, I'm not a direct Dave Ramsey like a alignment in the sense of like, don't borrow money. Like, I do think that you can utilize it in a way to supplement your life. You know, and especially at certain times it might be cheaper to finance than it would be to, you know, to pay cash for it. But just understanding what you're getting yourself into, I think, is very important.
And one thing to point out on that is if you buy a house and you have a mortgage, it's important to keep that financial strength moving forward. You know, as far as credit goes, income, especially in a higher interest rate environment. You know, we're going to look for opportunities for you to refinance. And if you change something in your financial picture, it can affect if you can qualify for the refinance. Yeah. So I think a lot of people miss on that, and it's our job. You know, I'll be the first to admit I need to do a better job of reminding clients that, you know, during the process when they're buying a house, after the process when I'm doing my client check-ins. Yeah. If something is going to change, don't hesitate to reach out and just talk about the scenario with us. Yeah. Because we want to be able to give you the advice like, hey, if rates dropped 1% in the next month, you want to be able to take advantage of it.
You want to be ready to roll.
Yeah. Because it's not promised to stay. It's not promised to get there, and it's not promised to stay. So
when I think it's so easy when you're in the middle of a transaction of buying a house, it's so easy to look very like presently minded, right? Yeah. Look at it like, okay, can I support it right now? But we really need to make that decision. I mean, in a sense, if we're doing a 30-year mortgage, we should be looking at that from a 30-year lens, right? What does the next 30 years look like? Even if we know that when you buy a house, it's going to be a, you know, 3 to 7 year, I think is the statistical average of a mortgage lifespan. You either sell or you refinance or you pay it off, whatever it may be. We need to look at it from a big picture standpoint, and it's hard to do that sometimes for a lot of people because they just want to make that decision right now, especially first-time buyers. That lease is coming up. You kind of feel that pressure of like, I need to make this decision now before my lease is up so I'm not homeless, and you just kind of rush into that, and we need to understand that, especially from an equity standpoint. I think that's the biggest misconception is that you're okay to just utilize down payment assistance. And I always think it's kind of interesting. It seems like there's a general consensus from industry professionals that some of the best content you can post on social media is when your client gets paid to buy a house. Yeah. I think that's the funniest thing when somebody brags about that, because the reality is if you're getting a check back when you buy a house, you have negative equity in a sense, which again, I want to make sure it's clear that our first-time home buyers know that as long as you know what you're getting yourself into, it's a great avenue to get you into a home, because I am still an advocate for 100% financing over renting. I will agree with that. But it's not something that like we need to be hanging our hat on and making that our business model where we're only selling that product. if we're having clients utilizing down payment assistance and 100% financing, we need you to understand to commit to it. And one of the biggest misconceptions that's kind of been skewed over, basically the last 13 years, 12 to 13 years, is that appreciation is just guaranteed. Yeah. And that your home's just going to continue to go up in a linear line at 4%. And we can't promise you that, as much as we want that to be the case, right? As industry pros and frankly, as real estate owners, like you and I both know in real estate, we want values of our homes to keep going up. Partially, we have to think in the back of our heads, like, what does that look like? Is there ever going to be a time where it slows down, or maybe it dips back down and then it comes back up? Like, real estate's been proven year over year to be a great investment, but we just got to make sure that there's an understanding of what you're getting yourself into. If that makes sense.
Your risk is a lot higher, right?
Exactly.
So it's just I think the key to that is know what you're getting into, know the pros and cons of it. And as long as you're comfortable with that, and then it was explained to you by whoever you worked with,
and I would say evaluate to the best of your ability what your future looks like. Now, life happens, things change, new job opportunities, new changes in family, whatever it may be. Life moves. Like, I don't want to make sure you don't have to commit to this house forever. A lot of people do find their forever homes. That's fantastic. But knowing and understanding, like, we want to do as much planning as we can. But if something does come up later, we're here to help you navigate that too, if that makes sense. Sure. So anything else we missed on that?
I don't think so.
Yeah. I feel good about some of the stuff we've talked about. I think this has hopefully been valuable for everybody watching. I think that, if there's anything I can say is that, the timing of the market and this kind of roots back to the question of like, hey, I'm going into 2026. Should I buy a house? Trying to time the market's never really the proper statistic or the proper strategy, in my opinion. I would tell you, like, from a real estate standpoint, try not to make your decisions based on timing the market. Make the decision based on your family and your life, because that's at the end of the day, the number one priority. And we're here to help navigate the nature of the current market and see if that aligns with your family.
People that get paid a lot to time the market can't even time the market.
Correct.
So, that's the kicker, is like, what stage of life are you in? And if you're ready, you're ready. If you're not, you're not. You might think you're ready and then have a conversation, be like, okay, I feel like I'm not quite there yet. My lease is up in 8 months. I'm going to revisit this. But yeah, timing the market, when people bring up like, should I wait? It's like, I don't know. I don't know.
The words we always say is like, are you comfortable now?
Yeah.
And if you're okay with the current state of the financial market, I would encourage you to pull the trigger now if it aligns with what your family wants to do. And if there's an opportunity to save you money down the road, by all means, we'll reach out and let you know. No doubt. That's something that we monitor. We don't just go away after you close a loan in a transaction. We want you to know we're going to monitor your situation. And if there's an opportunity, we'll be the first ones to reach out to you.
100%.
So, well, Louie, this has been fun. Appreciate you kind of sporadically making this a priority and popping in. But
you bet, man.
Just appreciate your guidance and leadership and accountability and everything that you provide for me. And like I said, hopefully everybody listening got a little value out of this. I'll be sure to link all of Louie's information and stuff below. Key Mortgage Group, we work together, and we hope that, if you're an industry pro in the Des Moines Metro or any of the states that we work in, that you trust our team and know that we care about you. So I'll be sure to link Louie's stuff below. And this is, been another episode of Educating Homebuyers. We'll see you guys next week.
Appreciate it.